Hey guys, this is Josh Lawton, co-founder of Newchip. I'm here with Rebecca Derby, the Director of Operations from Alamo Angels in the city of San Antonio. I'm excited to talk with her. I hope you're excited too, because we're going to have a great conversation that is focused on helping you, the entrepreneur, understand what angel networks, what angels are looking for, so that instead of wasting your time doing bad pitches for investors who aren't going to give you dollars, you can understand specifically what Alamo Angels and their investment groups, investors like to be able to see, but also more broadly, what angel networks and angels want to be able to see across the United States of America. So, Rebecca, thanks for taking the time to chat with me, and I'm really excited about this.
Absolutely. Thank you for having me. There's a lot to share, and hopefully these entrepreneurs see a lot of good value in both having an accelerator program like Newchip and pitching these angel investors like the ones in Alamo Angels and throughout Texas as well.
Well, that's really cool. So give me and them a little bit of background on Alamo Angels. So when did you guys start? How long have you been in operation? Give us a kind of lowdown on what Alamo Angels is.
Absolutely. So in about the fall of 2016, there was about a dozen or 2 dozen members of the community who they saw that there was no real connection between the local investors and the startup community. They saw that there was this group of people who had the capital and had the resources to invest, but they had no idea even where to begin. We were started in December of 2016 as the San Antonio Angel Network. Since then, we've rebranded to Alamo Angels to better reflect where we're at and really take pride in the city, because we absolutely love this Alamo city. And since then, we've grown to about 100 members who have invested about $3 million into 22 startups,
Okay.
15 of which are here in San Antonio.
Well, I mean, and that's amazing. And one of the things that, for anybody who hasn't been to San Antonio recently, is the amount of growth, the amount of kind of energy that is down here. I was first in San Antonio in 2003, and the city is completely different. And Alamo Angels, you guys are part of that as well. And when you look at growing this ecosystem with startups and with entrepreneurs, I mean, how do you guys picture that growing? How do you guys take part in the growth of startups and the entrepreneurial journey?
So you mentioned 2003, and that was about the time I was first introduced, or maybe even a little earlier than that, to downtown San Antonio. My grandmother and I would ride the old red trolley buses downtown. It was so much fun, but San Antonio, especially downtown, in my mind, was known for 3 things: terrible parking, vacant buildings, and a bunch of homeless people.
Mm-hmm.
Now, any city, and big city for that matter, is going to have those same kind of problems. Looking at where we've come from 2003 to now, and even early 2010s, earlier in this decade, has been awesome. It's been great. And so with the momentum that we've gotten in less than 20 years, it's super interesting to see where we could possibly get in the next 20 years. And then looking at the next 50 years, what San Antonio and especially downtown will be. And so how we're supporting the downtown startup ecosystem and all these entrepreneurs is letting them know that there are angels out there and there's angel investors in our backyard.
And that's interesting. And I love the fact that you talk about angels who give back. And that's one of the interesting things that is very much different from the traditional institutional investor, is that there is normally a reason that goes into why an angel is going to invest beyond the monetary term. And for anybody who doesn't realize, the term angel investor actually comes from theater companies. Back in the day, you would have people who wanted to be able to put on a play. They thought the play was important on Broadway, and so they would put their money in. Well, they put their money in knowing that they probably want to get it back out. Angel investors are different, right? They expect to get the money back out. They expect a return on investment. But they look at different things, different qualities inside of a startup versus just what is your capital flow, how many people have invested, what's your traction, what's your ARR, all these different things. What are some of the things that when people are pitching Alamo Angels or angels in general, that angels just grab onto that isn't what you might normally think as a traditional kind of business model?
I would say the very first thing that they grab onto is going to be the story and the entrepreneur. We really like to hear a good story. Mm-hmm. Everyone does. Yeah. And with a good business comes a great story. And that story may be of catch some angel investors as more the emotional side. We've had a lot of medical devices and medical companies lately that are impacting and specifically targeting the kind of 65 plus age category. And a lot of our investors have parents that are older than that, and they have a real emotional and sentimental value to the company and the problem it is fixing because of their own personal needs. So there's always that emotional side of it. There's also the side of investors and angel investors in particular saying, wow, if this company were true and I could buy their product right now, this would make my life 100 times better. So there's these people in institutions like, the large banks and the insurance companies who have problems, and there's no real company out there that's solving those problems and meeting those unmet needs that we know of right now. These startup companies are saying, I have it, I just need the capital and infrastructure to grow it.
Mm-hmm.
And so that's where our angel investors come in. And it's really a win-win situation for both the entrepreneur and the angel investor.
Well, that's what I always like to be able to think about, is how do you create win-win scenarios? And for any entrepreneur who's never done the due diligence part or never been asked for money, you don't realize how many applications, how many pitches you have to hear, what you have to go through. And one of the nice things about angel networks, like you guys, is there's a bit of due diligence, right? It's not just you're throwing out all these deals to angels. You're doing the inspection. You know what the thesis is of Alamo Angels or any other angel network, and so you're giving them quality deal flow. Now they may not want to go with it, but you're doing your due diligence behind it. One of the mistakes that I've seen entrepreneurs make in the pitch is usually they waste their first shot. And by that I mean they come to investors before they're ever ready to go to investors. And it's always the worst thing because nobody's going to give you money, and then being able to get back in the door is always harder than it was to get in the door. What are some of what are the top 3 mistakes that entrepreneurs make when they're submitting applications, when they are going after money?
I would say the top one that comes to mind most immediately is knowing who your investor is. We as angel investors like to participate in certain rounds, say seed and pre-seed rounds, as compared to other more institutional and VC firms. We'll get in around the Series A, B, C, and later rounds. If you come to us raising your $20 million Series B, well, we're not going to be a good fit. And not only is it going to be a waste of your time filling out our extensive application, it's going to be a waste of my time, and I'm already going to have kind of this negative connotation on your company that I don't even know about. And I know it could probably be a wonderful company and have a great opportunity, but because it's not a good fit in our investment thesis, we have to pass. Another thing is, and I love the amount of startup growth across the country. I mean, I'm super biased because I love it here in San Antonio and in Texas, but across the country, we're seeing startup growths and entrepreneurs do things that we've never seen before. But when we get out-of-state applications or people in the Bay Area and up in New England apply on our website, it's one of those things, again, where I just unfortunately have to say, great business, not our investment.
Well, that's something that's interesting that a lot of entrepreneurs don't realize is depending upon who you're going to talk to, it's always easier to get money from people that you're next door to than going after all these different places. One of the things that is probably unique to Texas is, so for anybody who doesn't know, Texas did about $2 billion in investment. Sounds really big until you realize New York City did $28 billion the same year, and it was a $10 billion decrease. Understanding your investors and what they actually gravitate to and what they grab onto is something that is really important. And it's hard for Texas, right? I mean, Texas has 4 million people in Australia, basically the same land mass as Germany, so in many respects we are our own country in size and geography and people and cultures. What are some of the unique things that San Antonio or investors in your network look at? So for instance, in my experience in Texas, Texans love things that they can feel and they can hold. If they can feel it, if they can hold it, and it makes a monetary sense, they're not looking for the unicorns. They're looking for the believable. And so with your network and with your investors, what are they looking for? What is that kind of powerful statement for them that they like?
I would say the same concept of having it, okay, this is a unmet need, and this company is solving that need. Perfect. It's believable. I got it. It's here in Texas, even better. In San Antonio, even better. As well as companies that have just really had a good track record so far. Some of these companies we've seen, the oldest one I've seen lately started in 2002, and I thought, oh, it's only 3 years old, and then I realized, no, this is closer to a decade. in age, and unfortunately we passed on it. But these newer ideals are just really great, and because they've gotten such a great track record in such a short period of time, it's really nice, and we're looking forward to seeing more.
And so when you're looking at the traction in some of the businesses, what are some of the recommendations for the traction that investors in San Antonio like to see? Is it user growth? Is it daily active users? Is it, for a lot of them, sometimes it's monetary. What are the traction numbers that people like to gravitate to and grab onto in San Antonio?
Our kind of hot buy or thing that attracts our investors the most is earned revenue thus far. While it may not be a lot, having revenue in the bank and having revenue from the product, from the service, whatever it may be, is great. Shows that there's market validation out there. Shows that people are willing to buy it, and that they really, especially if you give us their contacts during our diligence process, and we can get on the phone with them and say, hey, what do you like about the product? What do you not like? And then we give that back to the entrepreneur. It's great for them because they get insight that they may or may not have gotten before, and we can talk to the customers and hopefully turn that customer from, maybe a one-time customer into a 10-time customer, and having more thousands of customers across the country. And
I love the fact that you said earned revenue. So I'm a big believer in the slogan, revenue cures all ills. Now, it doesn't fix everything, right? But as an investor myself, and as somebody who looks over what Newchip does when it comes to investments, earned revenue is something I gravitate to, because for me, you can do all the market validation in the world, you can have the best business case, you can have the best business plan, you can have the best marketing, but if nobody's going to buy your product, why do you matter, right? Why does it matter? Being old enough to remember the dot-com crash, I remember when daily active users was the key. How much user growth, how much traffic do you have? And then suddenly the economy got hit, and it didn't matter how many users you had because you had no money. And somebody who's looking at, we're in the longest bull run we've ever had, there will be a pullback unless we become Australia and not have a pullback for 50 years. And if you don't have enough cash on hand to weather it, and you don't have enough customers paying, it doesn't matter how many people are coming if you can't get them to pay. There's a huge divide. And bring this up because I'll say this inside Boston, I'll say this at different places, and people go, no, it's not. People destroy themselves when they go after revenue. And I think to myself, well, the first job of an entrepreneur is create a business, and the second one is create something that an investor wants to give you money into. Because if you don't create a business that can sustain without investors, you only really want to use investors' money for hyper growth, right? That's what you're doing it for. And investors don't want to give you money that you're just going to spend on debt or that you're just going to throw away. It has to do a return. You have to get an ROI on the money I am giving you. So when you're looking at validation inside of revenue numbers, what is that is there an average monthly month-on-month growth that you want to be able to see from a percentage-wise to be able to you started at $5,000 MRR, 2 months later you're at $10,000 MRR. What is there kind of that sweet spot for Alamo Angels or investors in San Antonio in general on what they want to see for MRR growth?
Unfortunately, I can't narrow that down to one single range. Mm-hmm. There's some companies that we saw when they were probably around the 28,000 MRR mark. Mm-hmm. And this was, I say this, and it was probably a year ago that this one company I'm thinking of in particular, they were at 28,000 MRR. Now, they just passed and within the past few months, they've passed 1 million ARR. So a little, different terms, of course, yeah, but great growth. And what we kind of saw before the 28,000 MRR mark was good. We saw, they have this much and they've retained or not spent this much, mm-hmm. All great numbers and great formulas, but I can't, and it's still kind of tricky. It's, I think, a little too early to tell exactly what that sweet spot is for mm-hmm. MRR and ARR for our investors. But revenue, I will say, is a kind of hot grab for our investors because a lot of people have it. Everyone has an ideal. But who has revenue? That's key.
So one of the things that I always think about with entrepreneurs is that if you're investing, you see hundreds of pitches. And so we all know what the worst pitch was we've ever seen. So to help these guys and gals not do that, describe the elements, describe that worst pitch you've ever seen, and obviously you don't need to tell them why not to do it because it was the worst pitch you've ever seen, but describe why it was the worst you've ever seen.
I would say the worst pitch I've ever seen, and it's still quite vivid, although it was over a year ago, was one in which the entrepreneur was so set in their ways that the way they answered questions from our audience was not in a good way. The questions were not answered because they thought that their way was the right way. And when they did know something, and this actually happened during the pitch, when they did know something, they called their friend and their co-founder and put them on speakerphone and put their phone up to the mic and
they realized there's a game show where you could just call a friend.
Exactly.
Wow. Okay. I gotta say that's never happened to me. That is now one of those worst stories that I've ever heard. I can't even believe that.
No, it was one of those things where it was like, if you want to be the CEO, you better know any and everything that goes into your business. Whether it's a teeny tiny marketing question of how are you going to spend this money that I'm going to invest, or something all the way up into technical, code, language, everything that the average human like myself couldn't quite understand. But one thing that also happened during that pitch that I tell everyone is that there's a fine line between being confident and knowing your stuff and being overconfident and saying, I'm the best and this is why you should give me your money. Really, when entrepreneurs say that this is my business and this is how I'm going to accelerate it and this is how I'm going to grow your money, that's what resonates with our investors the most because they can relate to the investor. They're speaking human talk, not any code, not any specific industry terms that an average individual person or investor would know necessarily.
It's interesting you talk about confidence because one of the things we always work with and I always tell entrepreneurs is there has to be a level of confidence, right? And there has to be a level of thick skin, right? Because you're going to pitch 100 times, 99.9% times you're going to get no. And if everybody thought this was such a great idea to do, they'd be doing it, right? Which is the other thing about investors. If the one thing, and I'm pretty sure you guys agree, the one thing that no investor wants to do is run your business. Right? So you don't need to worry about pitching. You don't need to worry about it. And the other part about it is, we've probably heard something like that before, right? There are very few unicorns out there. That's why they call them magical creatures. So most people, if they're lucky, are going to create a good business. They're going to maybe sell it, but the idea that you're the only one who could possibly get this done is the minute I hear that is the minute I go, well, no, that's you're not being realistic. Or the minute I hear, well, we have no competitors. There's nothing else like us on the marketplace. All right, well, I'll be wrong on this one because I don't agree with you. I bet you there's other people in the marketplace. But conversely, you gotta have some of that confidence when you're doing a great pitch, when you're doing a pitch that resonates with people. When you talked a little bit about stories before that and connecting with with investors, when you were looking at your best pitch you've ever seen, kind of what are some of those elements that you saw in that best pitch?
Man, there's been a lot lately, and it seems like they're only getting better and better, which is making it harder for myself and for these investors to really figure out, just on the pitch alone, without going into any diligence, which ones to even move forward with diligence. I would say the ones that have really caught my eye lately and really stood out, and will for goodness next several years, will be the ones who they had the entrepreneur who he was the CEO presenting, or they were the CEO presenting. They knew everything of the business. They knew what was working, what wasn't, and where they needed to grow, and what could get them there the fastest, and what would be probably, the more realistic goals and outcomes to have. They definitely had plan A, B, and C ready and fully ready to go and ready to execute, although of course you always want plan A. They had that confidence and they had that ability to admit that maybe I did something wrong or maybe we made a mistake in the past and now we're going to make up for that lost revenue and with something even greater. And so the opportunity and the ability to learn from mistakes is something that we love to see in entrepreneurs, because everyone's going to mess up. It's a matter of who learns from it.
One of the things that we talk about is building relationships, because the reality is normally, just on average, takes about 5 touches to be able to sell somebody. And getting investors is akin to sales. When you're looking at how to create a relationship with an angel or an angel network that isn't just based transactional, i.e., I pitched, you give me money, we kind of go away, but is a relationship of where you get to know the person, you get to understand, and maybe they don't pitch you for 3 years, maybe they don't pitch you for 2 years, but you have that relationship with them that when you are ready, it makes it a little bit easier to get your foot in the door. How do people build that type of relationship with Alamo Angels, or in your view, angel networks in general?
I mean, I have to say this to all entrepreneurs now, is never underestimate who is an angel investor in the room. So sometimes, our average stereotype of an angel investor is driving around in a very nice car, always wearing a suit, has the fanciest clothes, etc., and the list goes on and on. However, some of our angel investors, and whenever I first started in this industry myself, I made the poor mistake of realizing that person over there wasn't an angel investor, or he wasn't in our group, because sometimes they look, that like an average Joe. Sometimes our investors will show up to some of our events, which is perfectly fine, but they'll show up in clothes that they just got off the ranch in, and that's one thing I love about San Antonio. It's so unique, and you'll have just this genuine people at the end of the day making these investments. But one thing for entrepreneurs in terms of making sure that they keep their relationship good and that this relationship lasts with all of their investors, not just angel investors, is keeping in touch. I definitely tell all our portfolios and company, I want at least a monthly or quarterly, if not monthly report. Some of them have a bi-weekly update where it's just 2 bullet points and this is what went good, this is what went bad, and it's great. But keeping that relationship is really good. We've seen a few companies that have come through the process and pitched to our angels, and they end up not receiving any money, but the advice and the connections and the mentorship that they gain, I think, and it may be too early to tell, but I think right now it will be more valuable than any investment that they could possibly get right now. And so keeping those relationship with these angel investors, because they are people at the end of the day, and they've already made the mistakes. They may have the experience that you're looking for in your business. It's great, and they can really be invaluable when it comes to this advice and mentorships and everything, and making those new connections.
I mean, you make a great point, especially about not judging a book by its cover. There's a phenomenal book by Dr. Thomas Stanley called The Millionaire Next Door and then The Millionaire Mind, and it really goes into what an actual millionaire, high net worth individual really looks like at the end of the day. And they don't look like normally the person driving a Porsche and fancy clothes. It's actually usually the reverse. Usually those people don't have the money.
In the beat up F-150.
Right, exactly. And that's especially for Texas, because if you don't realize, vast majority of people who are major ranchers are millionaires. I mean, it's just the way it works. It's interesting, though, that you talk about communication. So one of my last companies that I founded, I sent out a weekly update. And actually, to be frank, I sent it out to investors. I sent it out to people who were interested in investing. I sent it out to my competitors, kind of as a big I'm coming after you type thing. But the nice part about that, it was 2 parts, and something I'm always a believer in with startups. There's part of the hype. There's part of, you're always catching up to the smoke, right, at the end of the day. And part of the good part about it is, as you're seeing successes, as you're seeing things that people can pass out, investors have friends. And the ability to say to somebody, hey, here you go, check this out. They just got this, is phenomenal. You never know about what type of opportunities come up from your own investors and said, wow, you're over here in Florida, I know these people here in Orlando, let's get you guys together. The other part about that is it makes it easier to get follow-on money. Because the one thing that investors, at least I will never do, is if I don't hear from you for 6 months, I'm never going to give you money again. Not going to happen, because you're not communicating with me. I don't know exactly where you are. I have a feeling like you're asking me for money because you're about ready to run out, or you've already run out. And the other part about that is normally they focus in on the wrong things. Meaning, we always had two kind of updates. One was literally I would use song clippings, from whatever to get somebody to read it, open it up. And I told them about, hey, this is some of the stuff we do. And some of it was hype, some of it was marketing, some of it was sales. And then I would say, we need to hire somebody, here's what we need to have. And then every month I would just send an investor update, which was to the point. The title was, investor update, October 2019. And then you would read it, start with the numbers, start with the forms, everything else, cash in, cash out, and that was it, done. And it was highly successful for when we did follow-on rounds of getting money in very, very, very quickly, because people knew whether or not they wanted to give us money, and were kind of hoping, wow, I got in at this level, or for some of them, I missed out at this level, which is what I like even more. I missed out at this level. Now when they come in, I want to be one of the first checks they get. So communication is so important at the end of the day. When people are communicating with you, what are some of the formats that you like to be able to see when they're kind of giving you the update, the report on how things are going? Is there a standard format you like to see? Because we hear from people who run some of the list services, whether they say, look, we're going to put it all up and beautiful and it's nice, or is it, look, just the facts, right? Give me the facts. I can read, if you just do a cutout from Excel, I can read it, and I'm gonna scan down to your net income, your gross revenue, percentages. I can see that. I don't need it to look like a K1 type thing. Does it matter, or does it not matter?
I would say, personally, it doesn't matter to me, because what I will do is get your information. I'll extract the really good points and maybe not so the good points, but the points that investors need to know about. I'll extract that, put it in my report, and send it because we have our own syndicate fund that has all 13 companies in portfolio, and we'll have a quarterly update that I'll send to all of our investors that are in that fund, and they will have all 13 companies all together. So instead of sending 13 different reports and different companies to all of these investors, I compile it down into one report and send it out as the fund each quarter. And so I would say, personally, it's not any format. I'm just looking for good stuff. I love the numbers. The more numbers, the better, but I need the data to back up the numbers, and cut out the fluff. That was one thing that I remember a lot of professors in college would say, you need to cut out the fluff. This can be said, this one-page essay or article can be said in a paragraph or less. Cut it all out. And that's really what I'm looking for too. I mean, unfortunately, time is valuable for everyone. But it's also, we don't have an unlimited amount. And so really cutting down to what the key numbers are and the key highlights of the quarter or whatever period you're reporting from is really good. Whether it be in a bullet point or an essay or PowerPoint, anything is fine with me.
One of the things that we always like to save to last is because usually entrepreneurs want to get to the meat and potatoes, and they start thinking about, well, what is my exit strategy? What is this? What is that? But a lot of questions we get from entrepreneurs in Newchip's Accelerator, or just even in general, is how do investors figure out a valuation? Because valuations are all over the board. Part of it's based upon where you're located. Part of it's based upon how much money is in the market. Part of it's based on how the stock market is. I mean, there's all these different variables that go into a valuation. So when Alamo Angels, when you guys are looking at valuations, how do you kind of take a sense of, is that a good valuation? Is that a high? Is that a great valuation for you guys? How do you kind of look at those type of things when it comes to a valuation? Do you guys care about discount percentages or corporate transaction rates? What are the things that come into your mind on evaluation for a term sheet?
So it's a little bit of everything when it comes to valuation, or when it comes to a deal. We're going to look at the valuation, any discount, what the investment vehicle is, whether it's preferred equity or a convertible or a safe. It all kind of depends, and I can't quite say that there's going to be equal weights distributed and it's more preferred or it's better if the entrepreneur has a convertible note versus a safe note. We really can't quite tell, because I think our investors like a little bit of everything. But in terms of valuation, again, it's just kind of a little bit of everything. We're going to take into account what the earned revenue is, how much money you have, how many people are on your team, what the market is going to be in the future and what it has been. What are your competitors and what are your competitors' valuations, and how does yours differ? How is yours higher or lower or just different? And so we always want to remind entrepreneurs that a truthful valuation is a lot better than a low or super high pie in the sky kind of valuation. As long as the entrepreneur is truthful and has the data to back up that valuation, that's what we love.
And that's a really good place to kind of help entrepreneurs focus, is that at the end of the day, investors, for the most part, especially networks and VCs and everybody else, we have a lot more data than they do. Not just the fact that we see tons and tons and tons of more pitches than they've seen in the past life. We'll see more in a month. So not only do we get a good feel for what are the valuations being asked for, we also have access to a number of data sources to see what are the deals that are actually funded. All the times that you guys see that entrepreneurs say, well, wow, they got funded at $2.1 million and suddenly they got acquired. Well, even though it won't be disclosed, right? Everybody has some information. We'll all start doing some digging, and we can kind of come up with the idea of this is where we all believe that it's fairly plausible that that's probably what their exit value was. And so it is really important, like you said, to come in with reasonable valuations, because otherwise you're going to waste time. Two, if you do it too low, well, guess what? You as the investor are losing equity, and that's one thing you can never get more of. And then if it's overly high, most investors, right, you just don't have time. You don't want to deal with it. It's a friction point. And so getting your valuation right and reasonable is one of the most expedient ways to being able to close the deal, close the term sheet, get cash in the bank. One of the big beliefs that we have, and that I have, is that time kills all deals, meaning that you will get sometimes entrepreneurs who get a couple term sheets, or entrepreneurs who get one term sheet, and they don't respond quickly enough, or they don't act quickly enough. What are some of those things that you've seen where you guys said, yeah, we'd love to do this deal with you, here's a term sheet, and then kind of came back and you said, no, we're not doing this with you anymore? Are there certain things that entrepreneurs have done that killed a deal after it really was theirs to lose?
I would have to say the one thing that we, unfortunately, as investors find out only in the diligence process that may have or could have been avoided and saved us both a lot of time was simple things like what's your legal, what's your tax structure, what's your legal filing, certain things that as long as the entrepreneur is upfront from the very beginning, it's great. One thing I would say from an investor standpoint that could be a deal killer in any situation would be when an entrepreneur just won't budge. And that's really good to be not stubborn, but be set and be definitive and have that confidence. But at the same time, you have to be willing to negotiate when negotiation is necessary.
Rebecca, I really appreciate you taking the time to talk with us. Our goal with this Investor Talk series is to reach out, talk with people in the know, because a lot of times entrepreneurs are getting it secondhand, thirdhand from different people. They're reading about it in books, and so it's always really good to talk with the actual people who are looking at deals and doing investments. And so I really appreciate you taking the time to chat with us. Guys and gals, if you're an entrepreneur, if you're in the San Antonio, Texas area, if you're looking for investors, if you're in that pre-seed or seed stage, check a look at Alamo Angels. It's alamoangels.com. Go there, apply if you're interested in money. You've heard from Rebecca about what they're looking for. You heard about Rebecca, what will kill deals. So you've got the inside scoop. We really hope you come out here. We really hope you reach out to Alamo Angels if you're one of those companies and you apply, because guess what? They're looking for great companies to invest in. And the one thing every one of us in the investment space will tell you is quality deal flow is key. And if you're a quality company, cream does rise to the top. So make sure when you apply, it's a solid application. Make sure when you apply, you're putting all your information, all your data out there. And make sure when you apply, you're actually ready for investment from anybody, not just Alamo Angels, but anybody there. So thanks for joining us. Once again, I'm Josh Lawton. I'm the co-founder of Newchip. If you are interested in working with us, if you are interested in our accelerator, it's launch.newchip.com. Once again, it's launch.newchip.com. completely equity free. We love helping you entrepreneurs out. And even if you're not coming into our accelerator, share this video, take a look at the content that we just have, go to all these other places where you can find information, because at the end of the day, people like myself, people like Rebecca, believe in the startup ecosystem, believe it's the engine for economic growth and prosperity, and we want you guys and gals to be successful. So thanks for joining us. We'll see you on our next Investor Talks.